Welcome back to the channel for a morning market update. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we're getting that move up just like we talked about. I'm on Bitcoin. I got the 4-hour pulled up. We basically were, again, this is the 4-hour on Bitstamp. And we were talking about our two shorter time frame moving averages getting across. Just like we said, as soon as we got price action above it, we test back down and then start consolidating. And we knew we were going to at least get the cross for at least a fake out and then test up to our green moving averages, the 50, 55 exponential, simple respectively. That's our 5800 point, 5850 actually to be exact. And we knew it was getting ready to happen. It was taking forever, obviously, but we talked about it in that last video. You could see we had basically gotten it like a couple times, like come down here, test basically, and then we got that strong move up. So we were confident at that point in time, as we were basically forming this like consolidation pattern at the moving average, that eventually we were going to bust through this sell wall and then get that strong move up. And actually, basically at the same time we came up to take out that parabolic SAR, the market was looking strong. Just like we talked about, we did get that move up here. So now what we're looking to see what happens is, we're expecting to get obviously some kind of sell-off as we tag this point right here. But the real question is, when it gets up here, are we going to get the sell-off, consolidation, continuation? In which case our next target based on moving average is going to be like the 6,500 range. Now, if we get rejected right here, which is very high likelihood as well, I would expect us to get rejected basically just below 5990, so just below 6,000 or just above 6,000. Essentially like a stop hunt, and then like forcing us back down, using that for like the extra move down. Now here we got basically, I'm going to switch off of our moving averages, or I'm sorry. Yeah, I want to turn off the moving averages, and then I want to switch over to a couple crazy, some crazy fibs. It's important now. There's so many ways that we could look at this. We talked about like how you could form divergences and how essentially like different oscillators and indicators can give you like different signals. So it's hard to tell like basically what the market is looking at. Like there's not confluence in the way there normally would be. And part of the problem is right here. It's because this huge wick right here on that sell-off. So basically what we're seeing is, if you're going by candle closes, you're going to essentially have like this channel coming down here, this smaller channel in blue, and we got like the breakout, the retest, and then essentially we're getting like the move up here. So we would expect the measure move to basically be like up to this dotted green line here. Now essentially what I have, there's so many things going on, so I'm just going to walk you through each one. This was our sell-off right here and our touching green, and then that's wicks. Okay, so we're essentially now, what are we doing? We're forming an ascending triangle. Okay, we basically have a flat top. All right, the top is flat. That's an ascending triangle. The moving averages, we're acting as resistance. And now what we're doing is we're busting above the moving averages. So that's an ascending triangle. It's a bullish pattern at the bottom of a sell-off. So essentially what happens is we sell off strong, we sell off a little less strong, we sell off barely at all, and then finally, we're able to essentially like bust through that, and we'll get our measure move up. Now what I would expect to happen though, because we're in an overall downtrend, is I would expect the measure move or this pattern overall to underperform. So essentially what you're looking to happen is this breakout, measure move to happen, but not to happen as strong as you would like normally see if it was in the direction of the trend. So normally what you would expect to happen is basically, you would get, a lot of people measure this different ways. They'll measure either from the flagpole, they'll measure the entire body. I like to measure the meat of the pattern. So if you're saying the pattern is from like here to here, okay, I take the meat of it. That way I'm not like setting like crazy goals, So that's going to take us up here to the top of our channel. And now this is what I say when it's important. Why it's so important to keep all this in mind, okay? Because this orange fib is just from our sell-off down here to the bottom. So that would put us at the 618. The 618 is our common retrace. So what that would basically be is that would be us selling off, retracing 61.8% of the move back. So we're essentially giving back 61% of the move. But in this case, it's 61% of the move back up because we sold off a ton, we get a bounce back up, and then we continue to sell off. All right, so that's what we would expect to happen here. The pattern is lining up perfectly with that, and then obviously we have resistance, which I'll show you in a minute here as well. But the reason I'm saying that would underperform is we might come up to like the 0.5 here and get rejected because there's so many people trapped in this position because we got such an aggressive sell-off. People didn't have a chance to get out, or like, you know, potentially like it was a running stop situation. So like essentially price moves so fast that if you didn't have a stop loss in place, or potentially your stop loss could have got jumped depending on what type of stop it was. So there's a lot of selling pressure at this point in time above us, so it's very likely that every move up could get sold into. But essentially what happened based on the fib is we came down, we put in our 0 point, we anchored at the top, and then we came up to our 236 immediately on that first candle, but we came up even higher. We came all the way up to our 382 on the very first candle on that bounce. So it was a powerful bounce, but it was a very powerful sell-off. So from the 382 we came down to the 236, consolidated in between, tried to push up, got rejected very strong. So what happened after that? The market said, okay, it's weak, we got a strong rejection, we're selling off. Came down here, we got a strong rejection to the upside now. So basically we just came back in this consolidation. We tried to break out of this blue triangle up, we tried to break out down, couldn't get a confirmation, came back up, and now here we are basically just consolidating in this same zone. So finally now we've exhausted the selling pressure here and we're able to move up. We got that close above any previous candle close in this pattern, or at least even at it. So what I would expect to happen here is we're going to get this powerful move up right here, consolidate and continuation. We're going to get the powerful move up here and then rejection, come back down, continuation to the downside. So yeah, at this point in time it could go up or it could go down. Based on the oscillator indicators, it's saying up. Based on the trend and overall, like, you know, sentiment in the market, I would say it's going down. People are getting bullish here because a lot of the altcoins have started moving up, and I would expect that to happen because what this is, it's common forms of like distribution. So essentially what happens is, you know, we'll sell off massively, the money will move slowly out of like the larger assets into the smaller assets. They'll have like a little bit of a run up, and then as the run up you know, peaks, essentially like the big money like liquidates or whatever, goes back into like the initial asset. So then you'll see like the breakout of that asset. So the altcoins all broke out yesterday, started moving up, started getting back gains. Now here comes Bitcoin after it, and you're going to see the altcoins start to sell back off now as smart money goes back into like Bitcoin, or, you know, on the sidelines, and then we can get that continuation in the direction of the trend. So as you can see here, we are getting that move up here, and we are at right actually where we're saying at our 200 moving average on the shorter time frame, or like the 50-55 area. I would expect us to tag this 382 here, and then that's going to be like a big determination in the market. And alright, so yeah, let's zoom out here and take a look at the bigger picture, and I'm going to show you why this is so important. Once again, I was doing a little experiment on the market. I've been doing quite a bit of experiments with YouTube analytics, as well as you know, showing some of my videos. So you know, please don't take anything personally or get too riled up if you see like a change in the content or something that you don't necessarily like, or you do like. It's not necessarily going to be permanent. You feel free to share your views one way or the other, and I'll take those into account. But again, I am doing like quite a bit of experimentation. So alright, so here we have basically, I haven't showed off a couple of my key trend lines recently to see if I saw them popping up in the space, and I haven't seen any of them around here. So what I'm going to do is I'm going to remind you about one you already know about, which is this channel here, the purple top channel, purple bottom channel, and then the green dotted line going through the middle. And then also I'm going to show you a line that I've never seen before on anyone's chart that allowed me to basically buy the absolute bottom of that sell-off, which everyone says like technical analysis doesn't work. There was no way anyone could call the bottom, and nobody knew what was going on. And I did show you guys this huge blue line already previously, support, but I did not show you the red line, which essentially like picked the exact bottom right here. So we're going to zoom out, and I'm going to show that to you now, and we'll see if it starts popping up other places as well. So and you will see, obviously, like I was saying, this channel, this purple channel, is that same channel that we were consolidating down in after our move up when we got up to like 14,000, and we had stayed inside that channel the whole time. And then we finally busted out of that, and that's when everyone got extremely bullish, and then we put in basically like our double top right here. You know, we came back up, found resistance at the previous like breakdown, and then we came back up to it and got that massive rejection. It was like a liquidity hunt from the bulls, like big time. Oh, it looks like I probably got filled at I think I had my order at 58.45, I think it was. So I probably got filled on that short. Um, so yeah. Anyway, beside the point, what was I saying? Oh, okay. So yeah, we basically got the breakout out of the channel. Everyone got extremely bullish, and then, like I said, we did not get our time frame close. You know what? I'm going back. I don't. Here's our daily. Basically, the red was the very important trend line that we had talked about on the weekly. Actually, that's strong. So it comes to the top here, and we were talking about if we got basically like found support when we sold off here and bounce, we would expect continuation and take this out. But that's not what we thought was going to happen based on essentially the exact sentiment in the market on these previous tops. And I actually even talked about like how this felt like right before capitulation, and that's what I was expecting to happen. And everyone was very focused on this long-term trend line here as well in green, but no one was talking about this blue line. I actually brought this up, the market top to market bottom trend line, and then obviously that proved to be basically the most effective trend line in existence, which I'm now actually seeing it surface, which is pretty cool. So obviously I'm reaching the right people. So we got down here to the blue line, basically found support exactly on the market top to market bottom trend line. So we found that perfect support here, and we were able to maintain that triangle and put in this massive flag pattern. And just like I said, the next move I would expect to happen is essentially the push back up as high as the 618 or retest like the breakdown, which we slowly are getting that. Like I said, we're already up past basically the 382 in orange right here. So we're potentially moving up, stair stepping our way up here slowly. Now it is going to take some time, but very likely we would come down to the 786 and then get the bounce back to the 618 before selling back off and just filling out this massive triangle. So it's very unlikely that we would break above 77.50 or break below 42.85 anytime soon. This pattern has been, not counting over here because the pattern hasn't technically developed until we top out or bottom out, depending if you're starting at the bottom or the top. But essentially this has been going on since December of 2017 is when this started. So this is like a multi-year pattern right here. And although some of these trend lines are longer time frame or whatever, at this point in time, this is the most substantial thing that we should be paying attention to. So the likelihood that we would break out of the bottom of the pattern is it's very unlikely, which is why I obviously took the long off the bottom. And then as you can see here as well, I had this absolutely beautiful trend line in place from our previous triangle, which you will often see that I do in fact extend my trend lines after they're no longer relevant, because often in the future they will be the tops of our next move. So exactly what I was saying here, I've extended out our purple trend line that we broke down from, and what's very likely to happen here now is that we do in fact find some kind of support here after we tag the 382, which we may have already. I'll look at it after I get finished recording this. Come down, find support, and then get our move back up to the 0.5, and then that would essentially be the retest of the breakdown. It would be the green Fibonacci zone. It would be the 0.5 of the breakdown Fibonacci as well, and then finally it would be tagging that descending trend line also. So I think it's very likely that essentially that would be our sell area there where we put that red circle earlier, or we could very likely see it here at the purple circle as well. And we'll go ahead and leave these on the chart, and then we can revisit that later on. And like always, I will provide my chart in the comment section, or in the description as well, for free. And if you're not familiar with the channel and you're new, or you are familiar with the channel and you haven't taken the leap yet, please go over to TradingView and check out the indicators for free as well, which is pretty cool. And you can not only use my charts, you can use my various indicators on your own charts, whatever you like, any combination of those things as well. So that is pretty cool. And then as you can see, guys, I have been slowly going over my trading strategy as well, and we'll be starting to go into further detail with that, as I do want to link that up with the indicators. And I may be actually interested. I did set up a Discord at one point in time, but just felt like I didn't want to dedicate like a ton more like time and effort into this channel, like at the moment and everything. But I may go forward with that, and I may also actually create a trading group, essentially where I would have, it'd be a free group, and I would just essentially have like, I don't know, a handful of people, whether it's 5 or 10 people, basically using the indicators with my specific written trading strategy, and then essentially like them going through, keeping a trade journal of their own trades using the strategy, and back testing it prior to, and essentially just like seeing other people's feedback, what kind of success they have with it. I'm interested to see, basically like different levels of traders, if there's experienced people that have been trading for, a decade versus, someone that has been, trading only for like, a year, and then maybe somebody in between, and just kind of get an idea. I've really been enjoying the YouTube analytics and this little, you know, social experiment that is YouTube. It's absolutely amazing the amount of things that YouTube tells me about not only the audience, but basically like the breakdowns of the videos, and I'm able to see like how my titles, content, length, like delivery, all these different things are affecting it. The amount of interactions that I'm able to get from people, because like that's a direct correlation between what YouTube like does with my content, is like directly correlated to how much interaction I get. So I've been experimenting with a couple of things to basically see if I could kind of like I don't know what you want to call it, like poke the bear, and kind of get people to press enter. Because I know a lot of times, I'm guilty of it. Before I created this channel, I never would comment on anyone's stuff, and I would rarely like it. I would barely even subscribe to creators that I would watch regularly. I don't know why. It's some kind of weird mental block or whatever. As soon as you get over it, you realize it doesn't matter. It doesn't cost you anything. It's just like a way you can show your support. But basically, like, as soon as you take that plunge and you finally like start interacting like that first time, I've found that like the likelihood that you will continue to interact is like exponential. So like it's weird, but getting like going that extra distance to get somebody to like finally like type on the keyboard and press enter or subscribe or whatever, makes a huge difference in like future interactions. Because if I get one person, to basically like interact with me, and then they interact with 25% of my future videos, and I put out, one video every, 2 videos every 3 days, so 20 videos, every month times a whole year, you know what I mean? So I'm basically like putting out, let's say, 240 videos in a year, and then I'm getting somebody to interact with, basically 50% of those. That's 120 interactions like extra just from that one single person in that one single video. So I can understand how it would be important to basically like create either exciting or controversial or whatever like content to get somebody to like either out of like joy or happiness or excitement to like interact with you, or out of like anger or whatever other emotion it is that you like provoke in them. There's like a strange kind of control that you have over like your viewers, your audience, your community. And I have been experimenting with that a little bit. I'm essentially expecting this to at some point in time sell back off. I'm not sure that this breakout is going to be confirmed. We still have quite a bit of time on our shorter time frames to kind of see where it happens. But again, we're just looking for like those confluence zones. And I wanted to put this one in here as well. Although it's not as strong of an area, there's definitely a likelihood that this could be like our top out area, because it's specifically the 382, and then it is also like the heart line of that channel. Don't lose sight of this channel, guys. Like, even though we broke out of the top here and everything, and then we came down out of the bottom, it doesn't mean it's like done with or anything like that. Like, the amount of time that we spent dancing around in this thing gives it so much relevance. So when we come back into something like that, like, it's hard to see on this. When we bounce down and we sell out of it, it looks like it's like irrelevant. But when we come back into something like that and start hanging out, like, not sure exactly how I had that. I did not pay good attention. I think that's it because I was looking at it as like the breakout retest, and then okay, so yeah, that looks right. So yeah, okay. So basically the 382 and then the heart line. So I think that's a high likelihood. And again, this was a very, very, very important trend line, and you know, I did not divulge that in advance, but I am going to give you this one, and we'll see what happens with that. Because I'm curious if once again this plays out, and then again I'm also curious too if I see this popping back up here somewhere else. But I think there's a very high likelihood this was our breakdown trend there. That was our breakdown trend there. I think there's a high likelihood we get that test back up and that we get it. So these are like my three areas I'll be shorting. Actually, this is not financial advice. I'm not your financial advisor, so please do your own research and trade responsibly. Basically, like I mean, it's obvious. I don't have to tell you anyway. This is a golden zone of the sell-off. So basically, like all we're looking at is like that's our swing high. That's our swing low. The golden zone is from. I mean, guys, I do the same thing every video. It's not like some crazy secret. I show you all my techniques. I show you all my indicators. I show you my trading strategy. I explain to you how I do it. I mean, this is it. This is our golden zone. Okay? So we're basically at the bottom of the golden zone. So depending how bullish the market is the market's obviously bearish, but inside of the bearishness, depending how bullish the market is like which one of these we're going to sell off at and reverse. And if I'm wrong, we'll go to the upside and we'll take it out. We'll take out the high, and that's us decoupling from the stock market. Or maybe the stock market goes into a rally. I don't know. I do not think it's likely though. As far as the stock market, and we can do a quick look at that. But as far as the stock market is concerned, the most basic way to look at the stock market, American stock market, whatever, is you're betting on the American economy, and right now the economy is extremely weak and has been selling off. So the last thing I want to do is bet on the economy. I'm not the type of person, who's going to, walk up to a, roulette table and see, three reds in a row and say, I'll bet on black because there's already been three reds in a row. Because that's not how it works. The probability does not change based on how many times red has hit already. It doesn't mean that black now has a lower chance of hitting. It's still 50-50 every time, or like a little different because of the green one. But depending how familiar you are with roulette. But regardless, basically this is our golden zone. So you want to either based on Fibonacci, you want to take profits right here, or you have Charles Dow theory is 0.5. And then obviously like our 618 fib zone, and then 786 and the 886 are great for like extremely bullish or extremely bearish markets rather, or retracements rather, depending on if you're selling off or rallying up. But they're still functional because they're like internal retracements, and they are like popular areas that they retrace. But in all reality, like the most common retracement zones are the 382, the 0.5, and the 618. And you can even more clearly actually see what I was saying about how this is like an ascending triangle much more clearly here, because you can see by the body closes, like we had that solid body close, open right there. So that creates like this solid wall right here. And then on the bottom, you don't have that. You have like the solid closes right here. That creates like an angled line there. So that's why I would identify this as this triangle here. And then, it's important too when you're looking at these charts that whatever you determine is like the best way to like analyze something, like whether it's candle closes or wicks, or you want to look at both and kind of see what everybody's looking at potentially. You need to be like consistent with that and make sure that you're not being biased based on like what you want to happen or what trade you're in, because like more often than not, I will notice, that people will ask me to take a look at something and their bias is like evident already before I even look at it. And they definitely don't realize that. Obviously I realize it if they're having me look at something, because they're typically going to like lead in with some kind of like adjective or like something in the description that like keys in to whether or not like they're excited about this or like short on this or whatever. Because like people don't realize that, but they like subconsciously like you know put like off a bias. And I think sometimes you don't realize that, but when you start like recording videos and creating YouTube content and stuff like that, you have to listen back to like hours upon hours upon hours and like edit your videos and go through all this content and everything. And essentially like you realize that sometimes you have like portray a bias, or you might realize that you have a certain tone in a video, but it doesn't necessarily mean that you didn't do it intentionally. It's all part of the mind control. You see it in the media, okay? You see it on YouTube. You see it everywhere, guys. All right, some of it's intentional, some of it's not. I'm a big fight fan. You see it watching UFC fights. You'll hear like bias from the commentators and stuff like that. Some people do it more than others. Some people don't realize they do it, but when you listen back, it's extremely evident. So it is kind of funny how that works, but I don't try to be biased on this situation. I'm long in the market right now. Currently on a I don't even know, whatever you want to call it, on like a day trade or a swing trade, or I guess you would call it a swing trade. But essentially, like it's a strange situation because you can't really like look at somebody's specific trades, one specific trade, or look at this gain or this loss or anything. Because if most people are like me, you're gonna have like a bunch of different positions and different portfolios even in like the same market. So for instance, somebody asked me about this in the comments and I went into a little bit of detail about it. But basically like you might have a like trading position that you use, with like high leverage on short time frames, just for quick little like scalps and stuff like that, or like little hedge scalps basically. And then you have like a regular trading account that you use on like the daily time frame, weekly time frame, whatever, that's more like a long term like positional swing trade type deal. And then if you're like me, I actually have a system. I've actually never talked about this before, but I'll just go into a little bit of detail about it. But essentially, like whenever I trade something, because I typically chart, Bitcoin and gold and like Tesla, like key assets, or like the S&P or whatever it is, like But then I might trade other like things. I might trade some like altcoins or something like that. So say for instance, like I'm looking at Litecoin's chart and it looks particularly juicy, and Bitcoin is basically like telling me move is impending, but I know Litecoin tends to be like more volatile, or it's like further away from the key moving average. I'm expecting it to come visit. I might take my trade on Litecoin instead of Bitcoin, or take it on Ethereum because of the increased volatility. You tend to see like higher gains or higher losses. So I'll take my position in that. So if I say took like $1,000 position in Litecoin, and let's say I made 10% on it, I made $100. I will take 1% or 10% or whatever it is of my profit, of my actual profit when it's all said and done, and I will hodl that in that asset. Okay, so if I traded $1,000 position and made 10% in Litecoin, so I made $100, I might save $10 of that $100 in profit. I will just hodl that in Litecoin. Okay, so and it's important, in my opinion, to do things like that because it actually builds your strength in the market. And by distinguishing those different accounts and those different positions, you then create like a different self control. Because when I first started trading, I would initially, trade just like one sum. Okay, so if I had like $5,000, I literally would like trade like $5,000. You know what I mean? If I was looking at a Litecoin trade, I was looking at a Litecoin trade for 5,000. I might spread out a couple orders or whatever, but I mean, this trade was about to be like my account, and I was going for it. Like everyone, you know what I mean? Like the better part of your account. Sometimes you didn't get it filled. You only got in with half of it. whatever, but you know, it was just reckless, and I had no idea what I was doing, and you know, it was crazy. And I mean, I was in the stock market. I got in like 98 or 99 initially and everything, and I mean, it was a wild time just to even get in the markets back then. But you know, you essentially like gain a bunch of experience over time, and you realize like you don't want all your eggs in one basket. Basically, you don't want everything in one fund, or you don't want everything in one crypto, or you don't want to just have like a bunch of like silver. Like you want to diversify, or property, or however it is, so that when these markets fluctuate or whatever, you know, you're in the right one when it pops off and you can take profits, and you know, you're in the right ones when they dump, so you don't have to worry about, you know, that portion of a portfolio that took like a particularly bad hit. Like if you're all in on airlines, you're getting wrecked right now. But if you have like just a little bit of your money in like, you know, airlines and cruise ships and whatever, that portion of your portfolio is getting wrecked. But you know, the portion that's in gold is making up for it because it's not getting wrecked nearly as bad. So that's where like the diversification comes in. But essentially, by having like not only that diversification, but even in the same asset class, by having like different accounts that you trade on different time frames, or by having like that small hodl position from like my scalp trades or my swing trades or whatever, you know, you build like self control that you're not always like, oh my gosh, the market's gonna dump. You're like, I need to just sell everything, and then you dump your position, and then you're wrong. Like so, instead, you're making like your scalp trade or whatever, and you might be wrong on that scalp. Like I might have got filled on that short here at 58.50 or whatever, and you know, price sells off for a second and then busts straight up through it. Like I'm not just out of the market here completely. Like I have another one coming here at the point 0.5, and like you know, I might show you this awesome trade where like I shorted the absolute top right here, and like you know, took it down, and then we just straight dump, and I made like, you know, 40% profit, and you know, I made, you know, $20,000, and you're all impressed by it. But what I might not show you is the fact that this short right here might have just been a hedge for a much larger hodl position. So like, you know, I might short, you know, one Bitcoin, and you know, it goes down 25% or whatever. So I make a quarter of a Bitcoin, and you're like, oh my gosh, that's awesome. You just made a quarter of a Bitcoin. Like that's like $1,200. Like that's sweet. But in all actuality, like I might have like a hodl position that's, you know, 7 Bitcoin, and in all reality, I just lost a substantially like larger fiat dollar value. So that's why it's very important that you understand that, you know, a single position in an experienced trader, investor, like, you know, whatever, is nothing, because it only represents like a portion of the account, and it definitely, you know, barely ever represents like the entire, you know, portion of like that asset, like trade or investment. So be careful what you're seeing, you know, or what you're going by. And if you're one of those people that is trading like your whole account on every trade, or you are only like interested in one asset or investing in one asset or whatever, like it's time that you do the research and you like learn and realize that there's a reason you diversify. And you know, these markets have made it very clear as well, because you know, if you were in like traditional markets, which are considered to be not very volatile, you know, you may be down 30% right now. But if you were in, like I said, like Boeing, you might be down 75% right now. If you were in crypto, you might be down 75% right now. You know, if you were in gold, which is considered to be like the least volatile, you know, and the most like solid, because it's, you know, physical gold in your hand, you know, you're still down like, you know, 10, well, depending when you bought, obviously, but you know, you're still down like 10, 15% on the recent moves. So, you know, there's a lot of important factors. And if ever there's a case, you know, with finances and trading, to take something with a grain of salt, it's definitely in these markets, because, like I said, like you know, one position should almost never represent that. And as you build up like your strength and your hodls and stuff like that, like I'm not gonna lie, it is crazy seeing, you know, you know, seeing a position drop by like 30% or 50%. Like some of the altcoins that I've taken profits in, and you know, just hodled down on, some of the ones I was just talking about, like, you know, I've seen them take like a 75%, 85%. I have some Cardano that's taken like a 90% haircut or whatever. It doesn't mean I hate Cardano. And me having it doesn't mean I love Cardano or anything. Like, I mean, I'm not gonna lie, a lot of the white papers sound great. Like, yeah, on paper, but there's a huge difference between essentially like marketing and like execution. And like a white paper is like marketing. It's like, this is my plan. Like, in real life, like the execution is what matters. Like, and that's a lot of times why you see these things fail is, when they're like just an idea, it's great. And then, the execution shows up and it's Decentraland. No offense to those guys. I mean, they do great work and everything, but if Decentraland came out like 20 years ago, it would be amazing, I think, and people would be all about it. But you look at it now and you're like, holy. But anyway, I'm not trying to like ream on any specific altcoins or anything like that. But this market is looking again very much to me with the altcoin rallies and this little breakout that we're seeing right here and everything going on. It's looking to me like that fake out distribution zone is taking place, where essentially we get like that retrace of the initial like sell off, and then all of a sudden we're just gonna get one of those like dumpster fire. Lightsaber red candle of death just show up in the market and smash us back down. But I could be wrong. We'll see what happens. At some point in time, I would expect us to come up here, put in a high, and then sell back off, and only sell back off to the 236, so like 5100. So if we can do that here, that would be cool. Also, obviously, if we can get a daily close, higher than over here, that's definitely a confirmation to the market that we put in a low. We put in the higher low based on closes, and now we're putting in a higher high. So that's at least us like beginning like short-term uptrend, and potentially like beginning to reverse this trend. It is important though that we keep in mind the daily moving averages are like extremely far away from us right now. So essentially, like what you would expect to happen after any kind of sell-off or whatever is to basically come back to your short time frame moving average, test it, and the majority of the time the initial test is going to get rejected. And again, that lines up perfectly. The red moving average coming in here with the hard line of the channel, the 382 of the Fibonacci, and then also our orange resistance zone. And like I said, yeah, so it's at 58.43 right now. And like I said, I think I have a short in at 58.45. And again, like I said, it's basically just taking profits. Like, it's not like I'm going like overall like from long to short in this market or anything like that. Like, it's a trade inside of like a trade inside of a trade. It's like tradeception. Like, once you have like a position and you start like hedging off of that position, and then you like hedge a hedge off of a hedge, like it just gets so deep that there's no way to even like keep track of that anymore. And another thing too, like why I kind of gave up on like showing off like trades and everything like that and decided it wasn't worth it and all that stuff is because it's just so deceptive, and there's so many different ways that you can be deceptive doing it. Like I was talking to my uncle the other day and I said, I can show you a portfolio that's, 100% on trades. All you do is just like, you could just take the same side of every trade like on two different accounts. So like I can just right now like be like, okay, this is a key moving average right here. I'm going to take a short off that moving average, and then on a different account I can take a long off of that moving average, and then obviously like after the trade plays out and I'm right, it either comes down to 236 or it goes up to the point 0.5. I just show you that account and I'm like, oh look, I crushed it. I shorted the absolute top. I longed the absolute bottom. Like, I mean, there's just so many ways to be deceptive, without even like pulling out Photoshop. So, just look at people's like results over time and consistency, and what they're offering and what they're asking from you in return. So, and overall credibility and time, but you do have to be careful because even that can be faked. So, crypto trend trader with our daily Bitcoin technical analysis. I may jump back on a little later and do gold and S&P. I'm looking forward to the open here, but I do want to do like a quick little morning update. And again, I'm also experimenting with the additional video time. So if you like the longer videos, let me know down in the comments versus the just quick little 15 minutes. I know it's like more convenient for most people to do like the 15 minutes, but I did notice that the watch time was substantially longer. So I may start doing like one long one a week, where I go on like, technical analysis, but more of like, my discussions into strategy and, education, and then, do like just the 15-minute technical analysis segments. But that's it for today, guys. Crypto Trend Trader, and I'm out of here.